Introduction to Stock Trading, your ultimate guide to the market. Ever dreamt of turning your passion into profit? Imagine waking up to see your investments grow while you sleep. Welcome to the world of stock trading, where your financial dreams can become reality. In this video, we'll unravel the secrets of stock trading and guide you step by step on how to get started. Ready to transform your financial future? Let's dive in. Welcome to our channel. Today we're diving into the fascinating world of stock trading. Whether you're a complete beginner or looking to sharpen your skills, this video will provide you with a solid foundation to navigate the stock market confidently. Note, this video is for educational purposes only, and trading is a risky but wealthy profession, so do it at your own risk. Section 1. What is stock trading? Stock trading is the act of buying and selling shares in publicly traded companies. When you purchase a stock, you're essentially buying a small piece of that company known as a share. The objective is to buy these shares at a lower price and sell them at a higher price to make a profit. Example, imagine you buy 10 shares of company ABC at $50 per share. If the price rises to $70 per share, you can sell your 10 shares for $700, making a profit of $200. Section 2. Types of stock trading. There are various styles of stock trading, each with its own strategy and risk level. 1. Day trading. Buying and selling stocks within the same day. Day traders capitalize on small price movements and typically don't hold any positions overnight. Example, a day trader might buy shares of XYZ at $100 in the morning and sell them at $105 by the afternoon, making a quick profit of $5 per share. 2. Swing trading. Holding stocks for several days or weeks to capitalize on expected market shifts. Example, a swing trader might buy shares of DEF at $20 and hold them for a week, selling them at $25 after a positive earnings report. 3. Position trading. Holding stocks for months or even years, betting on long-term growth. Example, a position trader could buy shares of GHI at $30 and hold them for 3 years, eventually selling at $60 as the company expands. 4. Scalping. Making dozens or even hundreds of trades in a single day, aiming for small profits from each trade. Example, a scalper might buy shares at $15.50 and sell at $15.55 within minutes, repeating this process multiple times to accumulate gains. Section 3. Key terms in stock trading. 1. Bull market. A market condition where prices are rising or are expected to rise. Example, during a bull market, the overall stock prices are increasing and investors are optimistic. 2. Bear market. A market condition where prices are falling or are expected to fall. Example, in a bear market, stock prices are dropping and investors are pessimistic about future gains. 3. Portfolio. A collection of financial investments like stocks, bonds, commodities, and more. Example, an investor's portfolio might include 50% stocks, 30% bonds, and 20% commodities. 4. Dividend. A portion of a company's earnings distributed to shareholders. Example, if you own 100 shares of a company that pays a $2 annual dividend, you'll receive $200.